let's do that. And then I will send it to you. And if for some reason it doesn't work, it should, then I am happy to rehab this conversation with your wife if you'd like.
Okay.
Okay, so we'll go through all the steps. Couple things to know about us are some of our guarantees. So we'll run through that. Did you get the package that we sent you in the mail with your credit report and the other information about us?
Yes, I believe so.
Perfect. Did you have a chance to look through any of the information in there?
Looked at the credit reports, and
Okay.
actually, that was about all I saw.
Okay, that's okay. So some of the information that's in there is what we're going to go through today. So that was why I was asking.
Okay.
So we've got a couple of guarantees that we hold ourselves accountable to, just so you know what you can hold us accountable to as well. The first one being that our closing costs will not exceed our quote at the time of interest rate lock, and if they do, we'll pay you $500. So we'll go through in a couple of minutes what those closing costs look like and why you're paying them. But the bottom line is that we overestimate all of our fees at the beginning of the transaction just to account for any variances that may come up throughout. I'd rather tell you it's going to be $5,000 at the beginning, and then on closing day it comes in less than the other way around. So whatever we say the closing costs are going to be, we'll guarantee that quote. So if they do come in higher, even by a penny, we'll cover the difference plus an additional $500. So essentially, you're never going to pay more than what we say it's going to be. Second one is that we guarantee our closing disclosure will be delivered to you at least 4 days ahead of your closing, or same thing, we will pay you $500. So your closing disclosure is the final breakdown of all the costs and fees that are associated with the loan. You're going to get an initial version of this document at the beginning of the transaction, but we are legally required to provide the final version of it at least 3 days prior to your closing. And if we miss that deadline, we have to push your closing date out. So we say that we'll deliver it 4 days ahead of closing just to allow you time. I presume that you're not sitting around waiting for an email from me. So we want to make sure you have plenty of time to get to that document, sign it, and get it back to us.
Okay.
And then the last one is that we guarantee we will meet loan conditions and closing deadlines per the original contract. So once you go under contract, there's going to be a whole bunch of dates and deadlines in there. The two most important ones are going to be your loan conditions deadline, which is the date that your loan has to be 100% approved in underwriting. It's also the date that your earnest money is no longer refundable if for some reason we can't close on the loan. And then your closing deadline, I just presume you will be homeless if I don't close you on the day I say I'm going to, and I certainly don't want that to happen. So we don't want to move that date around on you at all. What's your situation currently with where you're staying? Are you guys in a month-to-month situation? Is there a lease expiration date?
Nope. I'm actually just staying with family right now, so we've got quite a bit of flexibility as we look for something permanent.
Okay, perfect. And do you have like a date that you guys want to be moved into the new house or closed?
A lot of it depends on what we find.
Okay, perfect. So we're in no hurry. We just want to find a new home. Okay, so this is our pre-approval guarantees. This is why we asked for all of your paperwork from you up front. Just gives me time to go through all of the numbers and all the paperwork, ask any questions that I might have, get your file in front of an underwriter if we need to. So once we issue the pre-approval, which now that I have this information on Grace, I will go and I'll update some information, and then I should be able to issue your pre-approval probably tomorrow. But once we issue the pre-approval, they're good for 45 days. After 45 days, your pay stubs and bank statements just become too old for us to use, so we just need to update those. I don't recall if you had your 2016 tax returns in there. Have you guys filed those yet?
They are not in there. I emailed our CPA today and still waiting on those.
Okay, perfect. So whenever those are available, send those over. Your credit report is good for 120 days, so as long as we close before that 120th day, we don't need to pull a new credit report. We just want to keep that one in there. I don't want to keep pulling credit and digging your credit scores either, so that's what we'll do there. So once we issue the pre-approval, as long as everything in your profile stays the same or gets better, we're good to go. If anything negatively changes in your profile, like you quit your job, you file for bankruptcy, you go run up a bunch of stored credit and don't tell me about it, obviously that will impact our ability to do a loan. So we just ask that you let us know if something like that's going to change. If once I issue your pre-approval and you go under contract and something shows up in your credit profile that I missed that prevents us from being able to close on the loan, we will reimburse your earnest money up to $5,000 if we lose it, any short-term moving expenses up to $1,000, and anything else that you pay for out of pocket up to $1,000. So appraisal, home inspection, things like that. So essentially what this means is I won't issue a pre-approval unless I know with 100% certainty we can get you a loan. That way, the only thing you need to worry about at that point is finding the right property. So buying your home expectations versus reality, especially my first time home buyers, I just like you to know what's going on in the transaction. So if there's ever a point in the process where something doesn't make sense, or you want more information, or you want to see my super cool slideshow again, you just let us know and we'll walk you through this as many times as you need to see it for it to make sense. Especially with your wife not being on the call today, if there's anything that shows up that she has questions about, feel free to reach out and we'll go through everything with you guys.
Okay, thank you.
And then I know your personal real estate agent is in Florida, but do you have somebody in Colorado that you're planning on working with, or do you need a referral there, or where are you guys there?
Actually have a really good agent that we've made contact with and
perfect.
been working with more recently here in Colorado.
Okay, excellent. Can you, when you have time, send me their information? Because once I issue the pre-approval, I'll send them a copy too, so that they know what we've been pre-approved for.
Yep, I will do that.
And what's your agent's name?
Gail Coleman.
Okay. Perfect. Okay. So has she gone through like kind of what her role will be in the transaction and stuff like that with you yet?
He hasn't covered everything for farther down the road in the closing process.
Okay.
But has been very helpful in coaching us in initial things.
Okay, perfect. So once we get through the point where you guys are going to start making offers on properties, he's going to help keep you on task as far as where your dates and your deadlines are, help you negotiate any of the terms of the transaction with your seller, and then also help you kind of keep in mind all the things that you said you had to have in the property. Because generally what happens is you might see a really nice house and be like, oh, this house is great, but it's missing like your top 10 things that you had to have. So he'll help you kind of stay on task there to make sure that we don't put you into a house that doesn't meet any of your family's needs. So once we get the pre-approval all taken care of and you find the right house, you'll start making offers on properties. I always tell my first-time home buyers, plan on making anywhere between 1 and 10 offers. It shouldn't take that many offers, but that way you guys just don't fall madly in love with the very first house that you see and make an offer on, just because of the way the market is right now. Sometimes it can take 1 or 2 1 or 2 offers before something goes under contract. But once you get one under contract, that's when you're going to do your earnest money deposit. Has he talked you through what earnest money is?
No, he is not.
Okay, so earnest money is kind of like your renter's deposit. It lets the seller know that you're serious, and it becomes a part of the whole transaction. So let's say your earnest money was $2,000, and on closing day, your down payment was going to be $10,000. So you write a $2,000 earnest money check on day 1, and on closing day, now you only need $8,000 because they're going to credit it towards that down payment. Does that make sense?
Got it. Yes.
So at any point in the transaction up until your loan objection deadline, that money is refundable to you as long as we don't go past that date. So that's that date that we're going to be watching. That's that date your loan has to be 100% approved.
Okay.
Okay, so once we get through that piece, you and I will meet again, and we can do this online. And I'll just log you into my computer screen as we have now, and we'll take a look at the different spreadsheets and different loan programs that we have available for you, because now we'll have real property information like property taxes, HOA dues if there are any, purchase price, that thing. So we'll go through the different options. We'll pick when we'll get it locked in. At that point, I'm going to turn you over to my operations and processing department, and they're going to start all the paperwork side of things. So you'll hear from somebody in my operations department for your loan application, which you'll get electronically, and then you'll hear from somebody again after the loans come out of underwriting with all of your conditions. But at any point in the process, you can always reach back out to myself or Jennifer if you're unsure of who to talk to.
Okay.
While we're working on that, you're going to do your home inspection. So your home inspection is an independent third party that's just working to see what could potentially be wrong with this house or anything that needs to be fixed. Your agent more than likely has somebody that they'd recommend. I recommend using whoever they tell you to use, just because they inspect more houses than we do. But we want to find anything that could potentially be wrong with this house. Safety, habitability, and any of the systems and structure of the home are going to be the biggest priority for us. We just basically want you to know what's going on with this house. There could be something that shows up in the inspection that makes you not want to purchase the home. That's totally fine. We'll get you out of the contract at that point. You're out the cost of the inspection, but you will get your earnest money back. There could be something that shows up in the inspection that we just ask the seller to fix or provide some kind of funds in lieu of them fixing. So this will be another part of the negotiation after the initial contract. Does that make sense?
Okay. Yes, that does.
Okay. Perfect. And then once we get through that piece, we're going to do your appraisal. So this is when I start spending your money. So we want to make sure that everything's okay with that home inspection before we do this appraisal. So the appraiser is going to go out to the property and essentially do all the same things that the inspector did, but they're also going to double check that what the property value looks like. So a couple things can happen with the value. It can come in at value, so what you're purchasing it for, in which case nothing changes. It can come in over value. You end up with extra equity in the property. Nothing about the transaction changes. You just have extra equity once you close. It can come in undervalue. Comes in undervalue, that's when we stop and we go back to negotiation. We can't lend you more than what the property's worth. So if that property appraises for less than what you're buying it for, and the seller doesn't want to negotiate on the price, or if you've guaranteed the seller some amount above the appraised value. So you can go into contract and say, okay, seller, I want to buy this house from you, and I guarantee I'll bring an extra $2,000 to closing if the house isn't appraised above whatever it appraises for. So that'll be part of the negotiation, and your agent will help you with that too. But assuming we don't do that and the seller won't change the transaction details, and you guys can't live without the house, you're going to have to come to closing with the difference in funds from that purchase price to the appraised value. Does that make sense?
Got it. Yep.
Okay. Assuming everything comes back totally fine on the appraisal, we send it into underwriting for one final review and approval. Your appraisal gets reviewed and approved as well. We get your final documents and paperwork all set up, and we'll get you those final numbers at least 3 days ahead of closing. Then you go to closing, sign your paperwork, get your keys to your house. Simple enough, right?
Yes.
Okay, perfect. So these are some of the deadlines that we're going to focus on once you've gone under contract. The first one being your disclosure package. So we'll generally send this to you within 24 to 48 hours of you and I talking and locking in the loan. It's sent to you electronically. Depending on the loan type you should be able to sign the documents electronically as well. We just ask that you return that to us within 24 hours of receiving it.
Okay.
Any trailing loan documentation, we ask that you return that to us within 24 hours of us requesting it. So that could be things like updating your pay stubs, updating your bank statements, things of that nature. Once you go under contract, I'm going to give you a very detailed list of exactly what we need and when we need it by. So you're not going to have to keep track of all this stuff on your own. We'll walk you through all of it.
Okay.
Homeowners insurance contact information. We ask that you have that in place at least 5 days after you've gone under contract. You can use whoever you'd like for homeowners insurance. We can make a referral for you, whatever's easiest for you. Just let us know there. And then down payment funds in place. We ask that this is taken care of at least 10 days after you've gone under contract. So depending on the loan type that we decide to do, if we do the down payment assistance or if you guys come with your own funds, the down payment funds in place. So this is above and beyond anything that we've already talked about. So if you've given me a bank statement and it's got $5,000 in it and we're utilizing a down payment assistance program and we don't need to verify any additional funds, we don't need to do anything. This is if you're getting a gift from a family member or liquidating an asset or waiting for a bonus check or a tax refund, anything like that.
Okay.
Excuse me. So what kind of properties are you guys thinking of looking at? Are you thinking condos, townhouses, single family homes?
Ideally single family. We consider a townhome, depending on where we're at. But I have one property we're looking at right now that's a single family.
Okay. What's the purchase price on that house?
It's not actually on the market yet.
Okay.
Basically, some friends of our realtor have been considering selling it, and
Okay.
they let them show it to us.
Okay.
And we've communicated to them that we'd be interested in possibly purchasing it. And
Okay.
hear back from them.
Okay. Perfect.
Probably around 240 to 250 approximate range.
Okay. Perfect. And there's not an HOA on there as far as you know?
No, ma'am.
Perfect. Okay. Excellent. If for some reason we do stumble across a condo that we really like, or even some townhouses, there's just some things that we want to check on the HOA. So we'll kind of cross that bridge when we come to it. But if it's a true condo, just know that it's got to be on an FHA approved list if we go FHA. And that's something I'll help you with. So essentially, does he have you set up on an MLS search that's like sends you an email every day with different properties that have become available? Okay. So when you open up those property descriptions in the top right-hand corner, it should say financing type. We just want to stay away from anything that says cash only.
Okay.
And then if we go FHA, we want to stay away from anything that says cash or conventional, because that means if it's a condo or a townhouse, because that just means it's probably not approved to go FHA. If it's a single family home, we don't care.
Okay. Got it.
We don't have to check anything with the HOA. Okay, so one of the documents you're going to get at the beginning of the transaction once you're under contract is called a loan estimate. So it's generally 3 or 4 pages long. It's going to give you the breakdown of all the costs and fees that are associated with the loan. It allows for 10% under quote of third-party fees. So essentially, we can tell you it's one thing at the beginning of the transaction, and we can be wrong by 10%. you have to cover the difference and nothing happens to us. And we kind of think that's stupid. So that's why we came up with our purchase breakdown that just allows us to give you a lot more accurate breakdown of what those costs and fees look like. And it also lets us add all those guarantees in there. So I'm going to open that up, and I need to switch you over to my other screen. So give me just 1 second. Open up the spreadsheet for you. Okay, can you see an Excel spreadsheet?
Yes, I can.
Okay, perfect. Is it large enough like you can see all the numbers and everything?
Yes.
Okay, perfect. So I'm going to walk you through, we're going to take a look at these CHAFA programs first. So let's see here. Let's look at your FHA loan first. So CHAFA is Colorado Housing and Finance Authority. They have two different loan programs. They've got conventional and FHA. You qualify for both. So what we're going to want to do is just kind of see where the house payment falls that makes the most sense for you guys. And then figure out what makes the most sense for cash to close. So amount of money that you're going to need on closing day. So what we'll do is we'll walk through this loan program, and then I'll show you what all the costs and the fees associated with it are. Then we'll take a look at the conventional one, and then I'm going to show you a regular FHA loan that doesn't have down payment assistance, just so you can see the difference between everything.
Okay.
So total income, and again, this is based off of using the grace income, so I'll adjust this if I need to. So we've got $74.65. Total other debts, this is the minimum monthly payments as they were reporting on your credit report when I pulled the credit. So it's $25. Does that sound about right? It looks like you.
Now I've got another $200 and some on it that I'll pay off again.
Okay, so is the minimum payment generally about $25?
Yes.
Okay, perfect. And there's no other debts, there's no car loans or anything like that?
No, ma'am.
Perfect. Okay, so debt to income ratio is 23.3. So we want to keep this number between 40 and 45%. 45% is going to be on the high side. So the way we get this number is we take your total other debt plus your proposed new housing payment, and we divide that by your income. So we have plenty of room for movement in here, even if I adjust this income. So the bottom line is you guys qualify for a higher monthly payment than you're actually comfortable with. And I apologize, I didn't write that down in my notes. Where was that monthly payment you were comfortable with, or did you have one?
Ideally, probably not over 1,600.
Okay. Okay, so we'll play around with some of these numbers because I'm making some assumptions in here too. So this is, like I said, this is the FHA loan through CHAFA down payment assistance. This is the silent second. So what that means is CHAFA will give you up to 5% back in the form of a silent second mortgage. So it means it gets recorded against the property, and the loan it's a loan, but it never has a payment and it doesn't accrue any interest. So it's just kind of sitting there. You can pay it off at any time. They just ask that when you go to sell the property, or if you ever refinance the property, that loan gets paid in full. So that's this option. So $250 purchase price is going to give us a base loan amount of $241,250. An FHA loans, the minimum down payment is 3.5%. So that's where we get this $241,250 number from. Your down payment would be $87.50. On FHA loans, there's an upfront mortgage insurance premium that we finance back into the loan. So in this scenario, it's $42.21. We finance that in. So your total starting loan amount is going to be $245,871. And the down payment grant is going to be down payment second is going to be $12,273. So the rate on this program today is 4.5%. We threw in, these are all fictitious dates, obviously. So if you closed on May 1st, there would be no payment in June. Your first payment would be due in July. If we close in June, there's no July payment. First payment would be due in August. So you're always going to skip a month. Property taxes and homeowners insurance, I'm just estimating $1,800 for each of those per year. And then for right now, I'll just assume there's not an HOA. So this section over here is going to be the breakdown of the house payment. We've got $1,243.77 is going to be the principal and interest on the loan. Then you're going to have mortgage insurance, which you'll also pay monthly, is $170.89. So in FHA loans, you have an upfront premium and a monthly premium. Those are tax deductible, so you'll have that option when you go to file your taxes next year. Property taxes and homeowners insurance, we're going to estimate $150 a piece for those. No HOA payment, and so the total house payment in this scenario would be $1,714.66. I realize that's a little bit higher than what we just talked about, the $1,600, so we'll play around with this a little bit. And I'll send you some of these breakdowns when we get off the phone as well. So I'm going to walk you through all these costs, and then we'll look at some of the other options that you have. So down payment's 3.5%, which gets us to $87.50. This section here, these are all your closing costs. These are those numbers I'm guaranteeing. So $1,497 is going to cover everything I'm going to do in the loan. Excuse me. $600 is our estimate for your appraisal fee. $100 is our estimate for your credit report and your flood certification. Your flood certification verifies that your property is not in a flood zone. $1,125 is the estimate for your title company fees. So the title company is going to make sure that there's no other liens on the property after we close, and they're going to make sure that the liens that are currently on the property, so your seller's current mortgage, they're going to make sure that that gets paid off and closed and removed from the property after we close on the loan. They're also going to be the ones that conduct your closing on closing day. $200 is our estimate for your recording fees. So that's the cost of recording all of your paperwork with the county. And then in Colorado, there's a one-time county and state transfer tax of 0.01% of your purchase price. So this number will fluctuate up or down depending on the size of the home. So your total closing cost in this scenario that we're guaranteeing is going to be $3,547. If it comes in higher than that, even by a penny, we will cover the difference plus an additional $500. This section here is our CHAFA program fees. So CHAFA charges a 1% upfront origination fee. It's cost of doing business with CHAFA. It's how they fund all their programs. So your closing cost with them is going to be $24,1250. Right now, we'll just assume that there's not an HOA. If there was an HOA, then we would account for 3 months worth of the HOA dues to be paid at closing here.
Okay.
This section here is going to be your escrows or your prepaids. So we're going to set up 1 year's insurance to be paid at closing. Then we're going to set up an escrow account with your property taxes and your insurance. So your escrow account is basically a savings account with the mortgage company. So you're going to write one check every month for all of these fees for $17,466 to the mortgage company. And then the mortgage company is going to disperse all the fees. So they'll pay the mortgage insurance, and then they'll put some money into your escrow account for the taxes and the insurance. So those bills get paid, property taxes get paid twice per year. So you do a 6-month installment in February and then another one in June. And you're always paying the prior year's taxes. So like in 2017, we're paying 2016's taxes. Does that make sense?
Got it. Yes.
Okay. Homeowners insurance works the same way. They pay that once per year. So we're going to pay the first year's premium at closing, and then you're going to pay into that escrow account so that next year when the bill comes due, the mortgage company will cut the check. So there'll be enough money in that savings account for you.
Okay.
And then you're going to pay interest from the day that we close to the first day of the following month. So this number will fluctuate up and down depending on when in the month we close. So your total prepaids are going to be $35,0120. Your total settlement charges are $94.60. So closing costs plus CHAFA fees plus escrows. So that gets us to $94.60. Plus your down payment gets us to $18,210. Minus that CHAFA second mortgage. Now you guys need $5,900 on closing day.
Okay.
You're going to get a small credit from the seller on closing day for the taxes for the first portion of the year that they occupied the property. So if you close in June, they're going to give you a credit on closing day for January 1st through June 1st, for example, so that when you pay the taxes next year, you've already gotten a credit for the first part of the year that they paid the tax or that they lived in the property.
Got it.
Does that make sense?
Yes.
Okay, perfect. So when we talked originally, you said you were going to have between $5,000 and $7,000 available for closing.
Yes, and that would have end of this month have about 8. Okay,
perfect. I don't want to clean you out, so I want to make sure we're going to get this to cost as little as possible for you. So if this were the scenario, $5,400 on closing, or let's say $5,500 on closing, that would be okay for you guys?
Yes.
Okay, perfect. So this is one option. The other option you can do is they have a grant program through CHAFA. So exact same loan structure. Everything's the same. It's still an FHA loan. The difference between the grant and the silent second is the grant program, the rate's a little bit higher. So we're looking at 5% versus 4.5%. And then on this program, they give you a 4% grant to be applied towards your down payment and closing costs, but those funds never have to be repaid. So you'd get $9,800 on this scenario. Everything else is exactly the same. That house payment's a little bit higher because of the interest rate increase. Fees and costs stay exactly the same. But on closing date in this scenario, you'd need more money at closing because they're only giving you 4% versus 5%. So in this scenario, you'd need $8,000 or just a little bit over.
Okay.
So this is an option too. We also have a conventional version of the exact same loan that we just talked about. So exact same scenario. Now we're looking at $250. Interest rate's just a little bit higher than the FHA loan. Still get that 5% grant. Excuse me. The difference here is on conventional loans, the down payment minimum is 3% versus 3.5%. And then on the monthly payment, you don't have that upfront premium on the mortgage insurance, but you still have the monthly premium. So in this scenario, $80.83 versus on the FHA program, it is $170. So house payment on the FHA loan is $1,714 versus on the conventional product, we're looking at $1,627. So far this program looks like the better option of the two between FHA and conventional. So again, costs and fees are all exactly the same. So now total settlement charges are $94.87 plus your down payment gets us to $16,987 minus that CHAFA silent second gets us to $48.62. Still getting that credit from the seller for the first portion of the year's taxes that they occupied the property. So in this scenario, we need about $44.1895 versus $54.93. So
okay.
monthly payment, everything kind of is coming up, Brad, on this one. So I'd say the CHAFA ones might make a little bit more sense depending on which route we decide to go. So this is an option for you too. The other way we can go ahead.
This one is conventional?
This is a conventional. It's still CHAFA, but they do both FHA and conventional.
Okay. And what exactly is CHAFA?
CHAFA is Colorado Housing and Finance Authority.
Okay.
So basically, they're one of the entities in the state that helps first-time home buyers with low down payment options and down payment assistance options.
Okay. And interest rate on that about 4.625.
Mm-hmm. Yeah. And it's just, they dictate the rates since they're the ones who handle the loans. So we just take a look at the website the day that we lock you in, and whatever the rate is, that's the rate that we give you.
Okay.
Okay. Other option we can look at is just a regular FHA loan. So I have two versions of this. So exact same loan scenario that we looked at before, except this one does not come with any down payment assistance. And I just like to show my clients this is the other version of this. So the interest rate, as you can see, is much lower on this loan than the other one. The reason for that is you're not getting any assistance from anybody on this one. So house payment would be $1,625. Closing costs, again, are exactly the same, except now we don't have that CHAFA payment. So the total closing costs are actually less expensive on a regular FHA loan than they are on the CHAFA. Again, it's because we're utilizing those down payment assistance programs. Escrows and everything stay the same. And this one, your settlement charges are $6,900. On the other one, if you'll remember, they're about $9,500. But you'd need to come to closing with all of your closing costs and everything. So your total in closing day would be about $15,222. Which is obviously more than what you guys have available to you. So one of the options that you have available to you is we can increase your interest rate in order to cover your closing costs. So I think if I took this up to 4.5, which is the same rate on the other programs, so we're looking at $1,714. Now I can give you closing cost credit, so you're at $7,000. So now you're just responsible for your down payment in this scenario. So if we don't utilize the down payment assistance program, you have to come to closing with that minimum year down payment. But we can adjust the loan so that we're covering some of your closing costs. Okay. The rates is exactly the same. So it's kind of is just a preference on your part which route you'd rather go. Because on those programs with the silent second, that second mortgage, you're going to have this extra loan on the property for $12,000. It's going to have to get taken care of at some point.
Got it.
Does that make sense?
Yes.
Okay, so these monthly payments are higher than what we're talking that you wanted to be at $1,600. Again, I'm overestimating what I think these taxes and insurance are going to come in at. Mm-hmm. Are you comfortable at 17 if we had to go up to 1,700, or is that not reasonable for you guys?
I'd be pushing it.
Okay.
For what we'd be comfortable with.
So I'd say then maybe how about 1,627?
That'd probably be doable.
Okay, so maybe we lean towards the conventional loan. And I'll run both scenarios, just make sure that everything looks good once I adjust that income and just make sure we're still in an approvable range. But I'd say $250, depending on where those taxes and insurance come in at, that's probably going to be your threshold on the purchase price. And then more than likely, I'd say the CHAFA with the second, let's see, 1627 with 4,000. So you can do the down payment assistance grant or the silent second on either program with the conventional one. If you did the grant on the conventional, the payment would be $1,701 versus $1,627. So, and this is not a decision you need to make today. I can run both scenarios and just say you're approved up to $250, and we'll rerun the numbers once we have real numbers.
Okay.
Do you want to see any other purchase price? Do you want to go lower just so you can see it? Or are you comfortable here?
What would it look like if we put something in at, let's say, 220?
It's going to bring that house payment down to about $1,468.
Okay.
And then on closing day, funds to close is going to be about $4,500.
Okay. And that's with the silent second?
This is with the silent second. And then the grant, it's going to put you at $1,533.
Okay.
I'm just making some notes so I know which ones to send you. So do you want me to send you the FHA versions of these at all, or do we want to stay in conventional, you think?
I think I want to stay in conventional.
Okay. And grant. Okay, and I'll send these to you with 250 and 220.
Okay, thank you.
Go ahead.
One of the things our realtor has suggested is on this house we're looking at, maybe we offer 250 and ask that the sellers would cover closing costs.
Yes, you can definitely do that.
What would that look like then?
So if you did 250, let's say, what we would do is just take a look, how much are they giving you? And depending on that number, then I could say we could still utilize, I'd say we didn't use the grant one. I'd say we'd use the silent second just to see how much you'd need. Because you don't, so this grant here, or the silent second here, so this is 5%, and you don't have to use the full 5%. Maybe you only need 2%. So we would adjust that number accordingly, depending on how much money they were going to give you. So your total closing costs are going to be $94.87. So anything up to that number, the seller can cover on your behalf. So let's say if they gave you $5,000 in closing costs, maybe we only do a 3% silent second.
Got it.
Or if they gave you all of it, then we would take a look at maybe there's another conventional program with no down payment assistance. It's just a 3% down loan. And I think you'd probably qualify. There's a discounted mortgage insurance premium in there too. So I can run those numbers for you as well once we get to that point.
I'd definitely be interested in seeing what that looks like too.
Yeah, so we can run those numbers. I don't believe I set that one up. No, I did not. So we can run those numbers too and just see if it makes sense to go that route. The rate generally is a little bit lower. Sometimes that mortgage insurance can come up a little bit higher, but because you're saving on what those closing costs are going to be, because if I just, these are going to be some fictitious numbers, obviously, but I can show you really quickly. We go to 250 and we do, let's say it's 0.8. Yeah. So maybe we can get 250, your down payment $7,500. So now I'm at a house payment of $1,654. And then let's say we got $5,000 from the seller. Now you guys would need about $9,000. So again, we would look at both and just say which one makes the most sense at this point. Just as long as we know you qualify for these ones all across the board, then we would be okay.
Got it.
Alrighty. So I'll send these over to you in a PDF once we get off the phone. But is there any other questions off the top of your head that I can answer for you right now, or any other versions you'd like to see?
And the conventional with mortgage insurance, is that something that once we're at 20% of principal, the mortgage insurance can be taken off?
Yes. So basically what we'll do is once you close on the loan, I'm going to keep an eye on it every year and just see where property values, are the rates any better? Does it make sense for us to refinance? So we'll always take a look at it that way. If you never make any additional payments to the principal, it generally takes about 10 years to pay the balance down enough to get to that 20% equity mark. So the banks don't generally take into consideration property values increasing. So that'll be one of the things that we keep an eye out for you as well, is just say, okay, you bought it for $250, but today's worth $275 and your loan balance is $225. So how close are we to that 20% equity mark now? So we'll keep an eye out for that. But yes, generally it's, you want to be at 20% equity. Once you hit 20% equity, you're eligible to ask the bank to drop the mortgage insurance. Once you hit 22% equity in a property, it will automatically fall off. So after I want to say 5 years, the mortgage insurance premium goes down. So it'll adjust automatically to half of what you were paying once you get to a certain amount. And then it'll eventually, if you never touch the loan, then eventually it'll drop off.
Okay.
So this house that you guys are looking at, how long do you guys think you might stay in it? Is this like a long-term house?
I'd say probably 2 to 3 years on the
Okay.
short end, possibly much longer.
Okay. So it would just be something that we keep an eye on. And what I do is I always follow up with my clients on the anniversary of you purchasing the home. And I'll always ask you that question. Hey, where are you at? Do you think you want to stay? It's a time to look at the next property. Should we refinance? So we'll keep that communication going with you. That way we can kind of keep an eye on it, make sure that you're still in the same loan that makes the best sense for you guys.
Okay.
Okay. Any other questions right now?
No, I believe that's all.
Okay. I'm going to stop the recording.